Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com, and today we're going to have a look at the first commitments of traders report of 2013. As usual, we're going to start off with the changes in commercials positions. Here we go. We can see we've got orange juice on top with the 27% change in commercials positions, a 31% change in large speculators. And we've talked about this market a week ago. There was a relatively large change, but not as large as this week. And as you can see, prices have stopped their decline, witnessing a few days of rally. The question, of course, which signal is going to affect prices? We've got the change signal and the COT extreme pointing in opposite directions. So let's open the 5-year chart and see the extreme of the market. You can see that a few weeks ago we witnessed a relative extreme in market, and that put a top in prices. So the question really is whether, or actually when, we would witness a buy signal from the COT report. I'm suspecting that at least we should reach roughly 4,000 or 5,000 contracts net short for commercials. And that could actually trigger a rally. As you can see, the last one was roughly at these levels. The one before was actually close to the zero line. So that's really the question, when are we going to reach that? Of course, everybody should be advised to look at traditional technical analysis tools. You can see that we've got some significant support lines not far, so maybe that the bull side of the market is going to prevail. Moving on to the dollar index, 27% change over there in commercials position, and roughly the same change size as everywhere else. The last 4 or 5 months, you can see that commercials and large speculators were very close to the zero line, sometimes net long, sometimes net short. This time, large speculators have moved back to net long territory, so that could actually trigger a buy signal maybe. But let's look at the 5-year chart and see everything in a wider perspective. How extreme are we? You can see that a few weeks ago we were at a relative extreme in the market, actually on the 5-year chart at a significant extreme. And that put a bottom in prices, at least a relative one. If we look back in time, whenever commercials were net long, you can see that usually they were pretty decent buy signals. So the question really is whether this extreme will hold and we'll be seeing higher prices in the near future. Moving on to Fed funds, 25% change over there in commercials positions and a larger 37% change in large speculators positions. You can see that large speculators have just became net short, and of course commercials moving to net long territories. Opening the 5-year chart for a moment, we can see the extreme of the COT report. Of course, it's difficult to see the price chart, but looking at the COT report, at least on the 5-year scale, you can see that we are at a sort of an extreme in the market, but it's pretty difficult to determine. I'd suggest us to move on and have a look at large speculator COT extreme and see whether we've got something interesting over there. We've got 5-year notes on top at the 143 report extreme. You can see commercials just moving down net short territories and commercials being net long for a few weeks now. Let's open the 5-year chart and see the extreme over there. You can also actually, if you look at the price chart, you can see that we've got a very significant support line not far. Anybody considering either trade could take that into consideration. Looking at the COT report, you can see that whenever commercials were close to the zero line or being net long, that usually coincided with a bottom in prices quite often, actually. So we're witnessing that, and that's something we're suspecting to happen again. Moving on to lumber, 97 report extreme over there. It's going to be the last market that we're going to look at. You can see we had a pretty dynamic rally in the past couple of months, and that sort of stopped. The question is whether this rally will continue or the decline will continue. Well, you can see that we're not at a really huge extreme in the market. Stress levels could build up even more. So the question really is whether we're going to witness a pullback, for instance, in commercials positions to 2,000 contracts net short, meaning we would witness a decline in prices, but that could easily stop over there, and then we're going to continue back towards 5,000 contracts. That, if you look at the past couple of weeks of the COT charts, that happened. So That's something you need to decide. So that's going to be all for this week. Thanks very much for being with me this review. Anybody who's interested in a more in-depth and detailed analysis can check out our subscription service at cotbase.com, where you can add other great functions to your table or look at other COT report types, newer ones, CIT, TIF, disaggregated maybe, or add the options data to the COT charts, and a lot of great other functions too. So I hope to see you next week. So have a great weekend. Take care. Bye-bye.